attendance, right? Technical team dah masuk ke? Fairuz dengan Anisha ada. Okay. You can download you can download notes for provision topic in the Google Classroom. Alright, so Haras Kalis is here. Okay, welcome back. Bila balik Haras?
Excuse me, madam. Apa?
Sorry, I off the mic. Bila sampai Malaysia Haras?
Sampai. Alhamdulillah.
Yesterday.
Oh, 25th. Last 2 days ago.
Last 2 days,
Tapi
alright.
saya sakit.
Sakit. Sebab apa, demam ke apa ke?
Maybe ni kot. Flu biasa. Tak demam, dia sakit tekak.
Oh, kita buat COVID test tak?
Buat negatif.
Okay, Alhamdulillah. Alright. Good. Just rest for a few days, right? Take all the medication. Okay, insyaAllah. Okay, so doa. Can I ask one Ahmad Irfan?
Boleh ada.
Okay, Alhamdulillah.
Bismillahirrahmanirrahim. Allah mafta' alaina hikmataka wa ansyur alaina min fazaini rahmatika ya arhamar rahimin. Rabbi shrah li sadri wa yassir li amri wahlul 'uqdatam min lisani yafqahu qawli. Rabbana atina fid dunya hasanah wa fil akhirati hasanah wa qina adzabannar. Wassallallahu ala sayyidina Muhammad wa ala alihi washabihi wasallam. Walhamdulillahirabbil alamin.
Amin. Okay, thank you, Wan. Okay. So let me start with the attendance, right? So today is 28. May replacement. I hope AGW Accounting Global Week will be the new experience, increased knowledge, alright? Okay, from the speakers, right? New experience for you, right? Because we get opportunity to hear, alright, from the good speaker from the accounting background, right? Is Fairuz here? Alright, good. And then is Ahmad Muradi here? Muradi? Aina Dayana?
Ada, madam.
Okay. Alia Shakira?
Ada, madam.
Elisa Maisara?
Ada, madam.
Airul Akmal? Hairul Akmariza, Izwan Hairil, Muhammad Amri Tasnim.
Salam, Madam.
Ada, alhamdulillah. Akil Wajdi,
Saya, Madam.
Amira Alia, I'm having problem with my mouse. Okay. Nur Amirah,
Ada madam.
Nur Liana Atira, Nur Syuhada Aliyah,
Ada madam.
okay. Nurul Adibah Hanim,
Ada madam.
Nurul Arisha,
Saya madam.
okay. Nur Khairunisa, okay. Next Suhaibah, Valentina.
Ada madam.
Alright, thank you for your response. Okay. Done for group D. Next, group E. Next, group E. Ahmad Faik, Anis Nur Najihah,
Saya madam.
okay. Arisa Shamira, Fatin Farwiza, Fauzi Ismail, Marsha Kamila,
Saya.
Mirza Nur Haziq,
Saya, Madam.
Muhammad Haras, Nur Anisha Alia,
Saya madam.
Nur Aina Syafika,
Saya madam.
okay. Nur Amirah Irdina,
Saya madam.
Nur Damirah Lokman, Nur Farida Hanun,
Saya madam.
okay. Nur Hanani Antasha,
Saya.
Nur Najmina Zahira, Nur Aini Syuhada, Nur Ilya Elisha.
Saya, Madam.
Okay, Nur Farhana Azra.
Saya, Madam.
Nurul Shifa.
Saya, Madam.
Nurul Nashrah. Nur Nashrah. And Tengku Nur Aisyah Fatimah. Okay, last group F. Adeline Afifah.
Saya, Madam.
Okay. Azian Nuriza. Ilya Shamira. Azib, Muhammad Azib.
Ada, Madam.
Azri Amir.
Ada.
Ihsan.
Saya.
Irfan Hakim.
Saya, Madam.
Khairul Afiq.
Saya, Madam.
Syukri.
Ada, Madam.
Ada Zarif Adli. Zarif. Okay. Natasha Dania. Nur Akilah.
Saya, Madam.
Nur Fatin Auni.
Yes, Madam.
Nur Kamarina Azrin. Is Kamarina Azrin here? No.
Yes, Madam.
Okay. Nur Umimah.
Ada, Madam.
Nur Wafa Darwishah.
Saya, Madam.
Nur Farah Aisyah. Farah Aisyah. Okay. Nurul Wahida.
Yes, Madam.
Wan Ahmad Irfan.
Saya.
Danish Kushairi. Muhammad Faris. Faris Nazmi. Your brother. Your senior. Not everybody can join the session today, alright, because it's on Saturday, alright, and it's a short notice class, alright. So Alhamdulillah for those who can join the session, thank you, alright. Okay. So now, okay, actually for today's today class, I plan to have two parts. First part is a lecture on the new topic, Mfrs 108, I think, on provision 137, if I'm not mistaken. Okay. 137, and then second part on the briefing on the group project. Briefing on the group project. Okay, group project. We have only one group project. Okay, there will be 1 month group project. due date will be in week 12. Okay, in week 12. So this week is week 8, week 8 of the semester. Okay, let me share slide with you. I hope someone can record this session, then I can share with your friend for those who cannot make it today, all right? Can you see my slide here?
Yes.
All right, okay, it's on Mfrs 137. Topic here is on provisions, okay, provisions, contingent liabilities and contingent assets. Okay, reference page 866 textbook. Okay, I don't bring my textbook at office, alright, so I hope you can refer on your own, alright, when I refer to the page here, okay, 886. Okay, lesson outcome for this topic, alright. Okay, number one is students should be able to define provisions. Okay, number two, able to define contingent liability. Okay, number three, able to distinguish between provisions and contingent liability. Number four, able to explain the recognition of provision that give rise to liability. Number five, able to explain the accounting treatment for provision and contingent liability. Number six, okay, able to define contingent assets. Explain the recognition of contingent liability and contingent assets. And the last one is able to explain the disclosure requirement for provision, contingent liability and contingent assets. So there are three subtopics for this Mfrs 137, page 866. It's on provisions, contingent liability and contingent assets. All right. And how we disclose in the financial statement for the three items. Okay. I apologize, I cannot prepare I'm not preparing the slide for the scheme of work. Okay. For provisions topic, we will cover for 2 weeks, means that week 8 and week 9. So in week 9, we will discuss the tutorial question. So in week 8, okay, I will give you lecture on this topic, Mfrs 137. Okay, so first you need to know what is the definition of liabilities in the conceptual framework. All right, conceptual framework, okay, in chapter 2 of the textbook. Okay, liabilities, okay. Definition of liability is a present obligation, okay, present obligation of the entity to transfer an economic resources as a result of past event. Present, current obligation, okay, to transfer an economic resources. So it is an outflow of cash, for example, all right, so as a result of past event. Okay, now let's go through the definition of provision as per page 866. Okay, standard 137 defines a provision as liability, okay, a present obligation, okay, a present obligation of the entity to transfer economic resources. So provision is recognized as liability, okay, of uncertain timing or amount, uncertain timing or amount, okay. So the term provisions is used to cover contingencies that are recognized as liabilities in the statement of financial position. So provision is the word or the term used, okay, to cover any contingencies that are recognized as liabilities. So the term contingent is used for liabilities and assets. Okay, so there are two terms, contingent liability and contingent assets, that are not recognized as liabilities as it is possible or remote because they are failed the recognition criteria. So the term contingent is used for liabilities and asset for those liabilities not recognized in the SOFP because they are not able to meet the recognition criteria of liability. It's not present obligation of the entity. Okay, not present obligation. So we use the term contingent liabilities and contingent assets. Only provision is recognized as liabilities in the SOFP because of uncertain timing or amount. Okay, differences between provisions and other liabilities. Okay, uncertainty about the timing and amount of future expenditure required in settlement. Okay, so number one is the trade payables, right? So what is trade payables? Liabilities arising from the purchase of goods, okay, for which the amount has been invoiced or agreed with supplier, right? For provisions for warranty claims, all right, liability arising from past sales, it is probable for the outflow of economic resources and uncertain timing and amount because of the word provision in front of the name. Okay. Well, accruals, all right. Okay, it refers to accrued expense and accrued wages, uncertain with respect to their accuracy in estimation. Okay, that one. Where we should record those liability here in the financial statement, all right, under current liabilities. Okay, it depends on the amount. Okay, the amount is more than 10,000 will be normally classified as the non-current liability if the settlement took more than a year. Okay, contingency as page 865. Okay, definition is a condition or situation, the ultimate outcome of which gain or loss will be confirmed only on the occurrence or non-occurrence of one or more uncertain future events. So the condition or situation must exist at the end of the reporting period. So there are three possibilities may be used as a guide, okay, to define the contingency. Okay, is the word of probable, possible, and remote. Okay. Probable means the chance of the future event or events occurring is high. Okay. While possible is whereby the chance of the future events occurring is medium. And the word remote is the chance of future event or events occurring is low or slight. So there are three possibilities used as a guide for the word contingency. Okay, probable, possible, and remote. Okay. So how to distinguish between the provisions and contingent liability? Okay, explained in page 866. Okay. Provision recognized as liabilities, assuming that a reliable estimate can be made. Okay, because it meets the definition of liability. Okay, it is a present obligations, and it is probable that an outflow of resources and borrowing economic benefits will be required to settle the obligation. Okay, it is confirmed that there will be a settlement need to be made, okay, by the entity. While contingent liabilities, right, are not recognized as liabilities because they are either possible obligation, because of the word possible obligation, not probable, which have yet to be confirmed whether the entity has a present obligation that could lead to an outflow of resources embodying economic benefits, or number two also classify as a contingent liability. Number two, the criteria two also we can classify as contingent liabilities. It is a present obligation, okay, but do not meet the recognition criteria in the standard. What are the two recognition criteria of liability in the standard? Yeah. A provision shall be recognized when entity has a present obligation, legal or constructive, as a result of past event. Okay, entity has what? Present obligation. So there are two types of present obligation: legal, because of legal, or because of the constructive obligation. Okay, it should be as a result of past event. Number two, okay, second criteria, recognition criteria, it is probable that an outflow of resources, okay, more than 50% chance of the event to occur, all right, embodying economic benefits will be required to settle the obligation. And number three, a reliable estimate can be made of the amount of the obligation. So there are three recognition criteria of provisions. So number one, the entity has a present obligation. Number two, it is probable that an outflow of resources will be required to settle the obligation. And number three, a reliable estimate can be made of the amount of the obligation, We can measure it, all right? How much is the settlement that the entity, okay, should be made. Okay. If these three criteria are not met, no provision shall be recognized in the books. Okay, no provision recognized in the financial position. So, 1, 2, 3. Three recognition criteria, all, not all. All, 1, 2, and 3. So, what is present obligation? Okay, refer page 867. So, legal obligation derived from 3. A contract, okay, it is a contract between A and B, or between supplier and the customer, seller and customer, okay, business and supplier. A legislation, okay, or any act, environmental act, for example, all right, or other operation of law, okay, court decided by court case or anything, other operation of law, okay, related to law. So legal obligations are enforceable at law in the event of a non-performance. Okay, non-performance by any of the contracting parties means that if the customer can sue the company for the failure of the providing the warranty service, for example, right? Enforceable at law. Okay, enforceable at law. For example, an entity operates in a jurisdiction, this is another example about the operation of law, okay, that has environmental law on contamination, right? If the entity accidentally contaminates the environment, such as an oil spillage, okay, it has a legal obligation to clean up the contamination, because there is a legal obligation in that area, in that country. So the company has a legal obligation to clean up the contamination made by the company. Okay, that one. present obligation in terms of legal obligation. Number two, how about the constructive obligation? Okay, present obligation, constructive obligation. So it derives from an entity's action. Okay, from the entity's action. I can highlight here. It derives from entity's action, the companies. Okay, so how? By an established pattern of past practice, okay, published policies. Let me admit your friends here. Someone wants to get Zarif. Okay. Let's proceed. Constructive obligation derived from entity's action, okay, by an established pattern of past practice, okay, past practice, published policies, or sufficiently specific current statement. Okay, the entity has indicated to other parties that it will accept certain responsibilities. All right, so this is the constructive obligation come from the entity action. Okay, so as a result, the entity has created a valid expectation on the part of those other entities that it will discharge those responsibilities. So it creates a valid expectation that the company will clean the river, for example, for the contamination made by the company. All right. So this constructive obligation may not be enforceable at law, right? Okay, here I give an example how constructive obligation can be applied. Even there is no environmental law in that jurisdiction, in that area, the entity would have a constructive obligation to clean up the contamination if it has published policy. Okay, stated in their policy saying that the company has always honored such contamination in the past, right? In their companies or public policy stated that the company has always this is the social responsibility to the public, right? Always honor or clean any such contamination in the past. Okay, so that published policies under category published policies. Okay, that one of the example for the constructive obligation. Okay, so this slide will explain further the example on the present obligation for the legal obligation. Okay, example for the legal obligation and constructive obligation. Okay, example 1. A direct selling company which has an established policy of refunding purchases by dissatisfied customers would have present obligation a result of past obligating event. Right, so that we call as constructive obligation. Why it is a constructive obligation? Okay, because it has an established policy of refunding purchases. For example, company that provide money back guarantee. Okay, money back guarantee. Normally direct selling company. Can you give me example of the product that has a money back guarantee? They confirm that customer will not return the product to the companies. Ada tak? Money back guarantee. I think the Herbalife company is money back guarantee, right? Product. Not sure. Don't know. what type of the company that provide money back guarantee. They has an established policy of refunding purchases for dissatisfied customer. What's it?
Not VPN, madam.
Again?
Not VPN.
Not? Can you type?
VPN.
This is first time I'm here that kind of product. Cuba type tengok. It's the not VPN. Selling what, Azri? What kind of product here?
Dia jual software yang bila kita turn on dia punya software tu, kita punya IP address akan berada di negara lain. So dia untuk security lah. Kalau hacker untuk hack tak boleh.
Purpose, right. So meaning that they won't disclose the IP address to that the location, right?
Yes.
Okay. This is the software product, right? They provide money back guarantee.
Yes.
In their advertisement, it's stated in their advertisement.
Yes, 30 day.
Okay. 30 days.
Yep.
Oh, 30 days. Then if you you cannot claim how much that they charge you for the service, the product, service of the product. Ke free of charge? Kena bayar kan?
Kena bayar. Untuk 2 tahun $3.29 per month.
So meaning that if you are not satisfied within 30 days, you can claim for that money. Right? They stop the subscription, right?
Yes, madam.
Okay, then after 30 days, it's not valid anymore, right?
Yes.
So, right, that the software product. How about other product? Anyone? And you tahu? Tak ada? Ke semua dah tidur ni? Azri dengan saya je ni cakap ni. Yang lain ada? Respond please at chat box.
Kalau Netflix, madam?
Apa dia tu? Ada ni?
Netflix.
Type. Ada, one ada. Saya cuma tahu Herbalife product. Herbalife, dia provide money back guarantee. Bila ada lagi. Okay. Betul. Umimah. Alright. Ihsan. Apa ni? What kind of product ni? Please share in the chat box. What is the name of the product? Netflix, kita bayar dulu untuk 1 bulan. Do they provide the term and TNC? In their TNC stated in their published policy stated that you will get back your money if you are not satisfied. Not sure. Normally we need to read TNC, term and condition, right? Before we click agree, right? Watson product, Watson product. Many product in Watson product. What kind of product, Faid?
Saya tak pasti, tapi dekat dalam Google dia tulis TNC dia
Is it
dia akan dia dalam masa 7 hari.
Okay, so maybe for certain product for 7 days or 3 days, right? Okay. They provide that one. Okay, you can return the product with the original receipt, right? That will be
Yes.
That would be under is it constructive obligation? Yeah, constructive obligation. stated in their published policy. Okay, very good. Okay, next slide. Okay, example 2 here. Okay, automobile company. Okay, automobile company that sells cars with 3-year warranty for manufacturing defects. So, currently 5 years. 5 years or 4 years? Okay, 4 years. Okay, for any manufacturing defects would have present obligation as at the date of sales of each vehicle, right? So when related to the warranty for the product more than 1 year period, all right, in 1 year, that we call as legal obligation. Okay, it's a contract. It's stated as a contract. So legal obligation. So why it is a legal obligation? Okay, warranty is one type of the contract between the seller and buyer. Okay, 3-year warranty for manufacturing defects like handphone. Okay, they have the warranty for 1 year. Okay, and other gadget like headphone, earphone, I think headphone sometimes only one month or 3 weeks. Okay, that will be what, but normally it's stated in the TNC, term and condition. Okay, that one fall under legal obligation, not constructive obligation. Yeah. Remember, constructive obligation arise from entities' action, not from a contract, not from legislation, and not from operational of law. Okay, recognition criteria number 2 about probable outflow of resources and modeling economic benefits. Okay, here is when the outflow of resources, okay, outflow of resources, it can be cash or bank, all right. Okay, outflow of resources is regarded as probable if it's more likely than not to occur. More likely than not to occur, that is the probability that the outflow will occur is greater than the probability that it will not. Okay, so probability outflow will occur is greater than, so how many percent? So we put certain percentage here for the occurrence of the probable outflow of resources. So if the probable outflow of resources 50% change of occurrence, okay, if more than 50% change of occurrence, then we be considered the outflow of resources, okay, the event as a provision, all right, based on management best judgment. So is under estimate also, right? The occurrence, the probability of outflow, if more than 50% chance. Okay, number 3 is on a reliable estimate of the obligation. Okay, so it's by the use of estimate is inevitable, okay, meaning that certain to happen or unavoidable. Okay, the entity able to determine a range of possible outcomes and can therefore make an estimate of the obligation that is sufficiently reliable to use in recognizing a provision. Okay, so entity can decide how much of the amount of the provision, okay, that the need to pay to the respective person or the entity. Right, reliable estimate of the obligation. So, how many the criteria? Can you state the 3 criteria in the chat box? Okay, for the recognition criteria of the provision in the chat box before we proceed to next slide. What are the 3 recognition criteria of provision? Number one. What is the criteria number one?
Number one, present obligation arising from past event.
Yeah. Number two. Yes, correct Faid. Number two, Azri.
Probable then outflow of resource.
Yeah,
50%
probable
chance.
outflow of resources more than 50% chance, right? From the entity. Number three, Hanani. What is the criteria number three? Natasha? Hani pergi kenduri ni. Yeah, reliable estimate on the amount of the obligation. Okay. Let's continue a little bit. Okay, example one here. So look at this example one. A manufacturer sells products to its customers. The sales term include as assurance type warranty. Okay, assurance type warranty that the product will function in accordance with the agreed upon specifications. Under sales term, the manufacturer undertakes to make good any manufacturing defects in the products within 1 year from the date of sales. On past experience, it is probable that there will be some products sold with manufacturing defects. Explain whether any provision recognized in the above case. So first, before you can decide on is there any provision recognized, so check for the recognition criteria. All right. Is there any present obligation in the above in this case? Second, check for the probable outflow of resources. Number three, check for the reliable estimate of the amount on the obligation. Okay. So, number one, any present obligation as a result of past event. So, what is the answer? Yes, legal obligation. Okay, there is a legal obligation, which is the sales of the product with the assurance types of warranty, because the company provide warranty, right? So any probable outflow of resources, second question. Based on the past experience, it is probable that there will be some products sold with manufacturing defects. All right, based on past experience, probable there will be products sold with manufacturing defects. So number three, okay, any reliable estimate on the amount of obligation? Yes, but that's not stated in the question. So can we recognize the above event as a provision? Yes, a provision is recognized based on best estimate of the cost of rectifying the manufacturing defect. So rectifying here means the correction of the or repairing the manufacturing defects. So recognize provision because there is a present obligation, the probable outflow of resources, and the reliable estimate of the amount can be made. Okay, so how to measure the provision? Okay, page 870. So the amount recognized as a provision shall be the best estimate of the expenditure required to settle the present obligation at the end of reporting period. Okay, other requirements are as follows. The company need to look for the risks and uncertainties, present value of the expenditure, okay, the discount rate that reflect current market assessment, okay, and the probable future events due to changes in technology or legislations. So before they can decide on the best estimate of the amount of provision. Okay, next is the example one on legal obligation. Okay, a complete case on the Ramesh Berhad. In November 19, an employee of Ramesh Berhad was injured while carrying on official duties. So what happened here? he has filed a claim for damages from the company to the amount of RM1 million. Legal advice was sought by the company, and what happened? Okay, there is a 60% chance company will be held liable for 500,000. So the probable outflow of economic resources more than 50%, because there is a 60% chance the company will be held liable. So there is a 40% chance company will be held liable for 1 million. So this is only the probable is 60%, 40% only possible. Okay, possible obligation. Okay, so before we can go for the accounting treatment, let's answer this question first. Is the company obligating past event? Okay, employee file claim for damages. Is there any present obligation? Yes, there is a legal obligation whereby the law exists, operational of law. Okay, is there any probable outflow of resources? Yes, because there is more than 50% chance of the occurring of the 60% chance, right? Okay, any reliable estimated amount? Yes, for 500,000. Okay, if the probable outflow of resources more than 50% chance, therefore reliable estimate of the amount is the 500,000, not the 40% chance. 40% chance, not the probable outflow of resources, right? So how to record in the books? Okay, accounting treatment here. Ramesh Berhad has to recognize a provision for damages claimed by the employee. There is present obligation. Okay, state whether, okay, legal or constructive obligation. Okay, in this case, it is legal obligation due to a past event. What is the past event? Employee has filed for damages due to injury. That will result in probable outflow of economic benefits. There is more than 50% chance and the amount can be measured reliably. How much is the amount? 500,000 ringgit determined by the lawyers. So if the company recognizes the event as the provision, therefore you need to provide the journal entries because it affects the financial statement, affect the profit and loss and financial position. So what is the journal entry to record the provision? Increase expenses, debit statement of profit or loss, operating expense 500,000, credit provision for damages record as liability, increase liability 500,000. If the settlement take more than a year, then this liability should be classified as the non-current liability. Okay, non-current liability. Okay, in this example 2, okay, for constructive obligation, Asif Berhad operates one of its factories in a foreign country where no environmental law exists. So the company, okay, however, claims to be a socially and environmentally responsible corporate citizen. So the company provides this statement. Okay, the factory operations have seriously hurt the river ecosystem during the current year 2019. So the probable clean-up cost has been estimated at RM 1.5 million. Okay, so we need to answer this question. Obligating past event, yes. Damage done to river's ecosystem. Is there any present obligation? There is a constructive obligation whereby the company's reputation, okay. The company's reputation here is the company claim that they are responsible citizen, okay. So there any probable outflow of resources? Okay, more than 50% chance, and the reliable estimated amount is RM 1.5 million. Okay, so what is the accounting treatment? The company has no legal obligation to rectify the environmental damage. However, alright, it has a present obligation, okay, in terms of the constructive obligation, whereby the company claimed to be socially and environmentally responsible to clean the riverside. Okay, so is there any probable outflow of resources? Yes, 1.5 million. Okay, more than 50% chance, and the estimated amount of the obligation is 1.5 million. Therefore, recognize the provision in the financial statement. Okay, so what is the journal entry to record the above? Okay, if you recognize as a provision, debit, it will increase the expenses. Okay, debit, statement of profit or loss, 1.5 million. Credit, provision for clean up costs, so increase the liability for 1.5 million. Okay. That's two examples, okay, on the constructive obligation as well as the legal obligation. Next slide is we'll explain on the application of the recognition and measurement principles, okay, for other event. Okay, page 875. For example, number one here is future operating losses. Okay, is future operating losses, do the company recognize, okay, companies recognize as the provision. Okay, for future operating losses, provision shall not be recognized for these future operating losses. Why? Because do not meet the definition of a liability. Definition of a liability is the present obligation, right? It do not exist at the end of the reporting period. Future operating losses is just the estimation for the future period. All right, do not exist at the end, not present obligation. So no provision is recognized. Okay, onerous contract here. Okay, second, a contract in which the unavoidable costs, right, of meeting the contract obligation exceed the economic benefits expected to be received under it. So what is unavoidable costs? Okay, the cost of fulfilling a contract, such as direct labor costs, direct material costs that relate directly to the contract. So it is a present obligation under the onerous contract, okay, shall be recognized as a provision. So all the unavoidable costs, okay, we need to recognize the amount as a provision because already stated in the contract. Okay, stated in the contract. Okay, how about the restructuring? Provision for restructuring of entity or the company, restructuring exercise. Like who talk about the restructuring exercise from the AGW week, from which speaker? Do you still remember? Restructuring company. Anyone? I think that that speaker who talk about the street smart. What is the name of the speaker? Restructuring exercise. He worked for restructuring the company. restructure back if the company making a loss for a few years. He advised to close or restructure back the company. Who is the speaker?
Makhtar Abdullah.
Mr. Maftar, right? He shared experience about the what he did about the company who making a loss for a few years, right? Then he advised the company to restructure back, right? Improve the company, right? Dengar ke tak dengar ni? Okay, so provision here, provision for restructuring. Okay, restructuring means a program that is planned and controlled by management and materially changes either the scope of a business undertaken by the entity, change the business activity, tukar, change everything. Okay, previously the company is selling computer accessories, computers. Okay, now change from selling computer, change the selling what? Home appliances, for example. All right, change the scope of a business. The manner in which that business is conducted, from physical store to online store, for example. That we call as restructuring. Example here, sales or termination of a line of business. Terminate which of the product that show low demand in the market. Terminate. Okay. Closure of several plants. Changes in management structure. Change the board of director. Change the employee, cut off of employees. Change the employees' position, for example. That we call as restructuring program. So restructuring program, company need to provide a provision if the probable outflow of the restructuring program will occur, right? So provision is recognized is when constructive obligation exists, when it is stated in their company's published policy that the company need to restructure its management or the entity. All right, so recognize it as a provision. Okay, let me stop for 5 minutes before I continue with contingent liabilities.
Yes.
Okay, so complete settle for the provision. Provision recognized when it meet the 3 recognition criteria. Okay, how to recognize? We need to, what is the accounting treatment? Okay, increase the expenses, increase liability. All right, charge to profit and loss as well as charge to financial position. Okay, take 5, then we come back for 20. All right.
All right, madam.
Okay, thank you. Okay, shall we continue?
Yes.
Okay, thank you for your response. Okay, so we have two subtopic. Okay, contingent liabilities and contingent asset. Next slide is contingent liabilities, page 878. The contingent liabilities, okay, for those liability that not recognized as a present obligation, okay, as a result of past event. Okay, obligation that are only disclosed in the notes to the financial statement is similar to a non-adjusting event, right? Disclosed in the notes to the financial statement. Why? Okay. Why? Because do not meet the recognition criteria of provision. So there are two types of contingent liabilities here. Number one, a possible obligations arising from past events and whose existence will be confirmed only by the occurrence or non-occurrence of one or more uncertain future events not wholly within the control of the entity. Okay, so the percentage of the possible outflow of resources will be less than 50% chance. So, so recognized as contingent liabilities. So number two, it is a present obligations arising from past events, but it is not probable that an outflow of resources embodying economic benefits will be required to settle the obligation, or the amount of obligation cannot be measured reliably. So it meets the recognition criteria of number one. It has a present obligation, legal or constructive, but do not meet the criteria number two or number three. Okay. So a present obligation, okay, is not recognized as a liability because an outflow economic benefits required to settle the obligation is less probable than more probable. So only possible. Or the amount cannot be reliably measured, whereby the percentage of the occurrence is less than 50% chance. Right? Okay, now provisions or contingent liabilities. Okay, this slide will explain how to recognize based on the probable outflow of resources. If liabilities, all right, recognized as a provision if the probable outflow of resources more than 50% chance. So make a provision if liabilities less than 50% chance, all right, and more than 5% chance, right, disclose it as contingent liabilities, right? If liabilities less than 5% chance or remote, okay, no action taken. No disclosure is made anywhere in the books. No disclosure in the notes to the financial statement. No liability recognized in the financial position. No action taken. Do nothing. If the probable outflow of resources less than 5%, that's mean remote. Alright, so you can use this percentage to decide on the probable outflow of resources, whether we do the company need to make a provision or not based on the probable outflow of based on the percentage of the probable outflow of resources. Okay, now let's go through example 3 for the contingent liability. Okay. Company has a present obligation but do not meet the criteria number 2 and number 3. In early 2017, CIMB Bank granted Fendi Berhad a 3-year bank loan of RM5 million. Alif Berhad stood as guarantor for the loan and will be responsible for any default in payment by Fendi Berhad. Meaning that if Fendi Berhad failed to pay for the loan amount, Ali Berhad will be responsible for the payment for loan. Right? Okay. What happened in November 19? Ali Berhad received a notice from CIMB Berhad claiming that Fendi Berhad owed the bank unpaid loan installments together with late charges totaling 500,000 ringgit. Okay, so how to classify these two events here? Okay, Fendi Berhad is expected not to be able to settle the debts in 2019, right? Okay. So what is accounting treatment for the two accounting period? Okay, as at the year end 2017 and 2018, Alif Berhad as a grantor has no present obligation to settle the debts of Fendi Berhad. However, there is a contingent liabilities as Alif has a possible legal obligation to make a settlement on behalf of Fendi Berhad in the event of any default in payment because Alif Berhad stood as guarantor. Alif Berhad will have to inform users of a contingent liability of 5 million in the disclosure notes to the financial statement in 2017 and 2018 financial statement. Okay, so the company need to disclose the contingent liabilities 5 million in the notes to the financial statement. Okay, so how about the journal entries? No journal entries required. Okay, so only disclose contingent liability of RM 5 million in the notes to the financial statement. Okay, how about in 2019? Okay, at the year end 2019, Fendi Berhad is unable to settle its debts. Ali Berhad, being the guarantor, has a present obligation due to a past event which may result in a probable outflow of economic benefits. Alright. So in 2019, there will be a probable outflow of resources. Alright. So Alif Berhad has to recognize an expense of 500,000 against the current profit, and a provision will be made on the statement of financial position. So in 2019, Alif Berhad need to recognize the expense 500,000. Okay, this is the additional expense that the company Alif Berhad need to charge to SOPL, alright, and increase the liability for that amount. So recognize the provision of 500,000, therefore journal entries required. Debit SOPL operating expense 500,000, credit provisions for damages 500,000. So recognize provision in 2019, not a contingent liability anymore, because of the probable outflow of resources, and the amount of the liable estimate can be made for the obligation. Okay, next subtopic is on contingent assets, page 879. Okay, possible assets that arise from past events and whose existence will be confirmed only by the occurrence or non-occurrence of one or more uncertain future events, not wholly within the control of the entity. This is inflow. Contingent asset is the probable inflow, not outflow. Contingent liability, probable outflow of resources. Okay, possible asset. The entity shall not recognize a contingent asset on statement of financial position as asset, but disclose in the notes to the financial statement. Why? Only when an inflow of benefits is probable, there is more than 50% chance, right? when the probable inflow of the economic resources is probable more than 50% chance, then disclosed in the notes to the financial statement as contingent assets. Now look at this example 4 for contingent asset. In December 19, Aznil Entertainment filed a lawsuit of 4.5 million against Jasco for using his image in Jasco's recent advertising campaign. A verdict was given in favor of Aznil, but the hearing to determine the amount of damages will only be held in February 2020. Okay, Aznil filed a lawsuit to Jasco. Alright, so it is in an inflow of economic resources to Aznil Entertainment. Okay, so a verdict or the court decided the judgment was given in favor of Aznil. So the accounting treatment. There is a possibility that Aznil will receive some compensation damages from Jasco when a court judgment is made the next year, because hearing will be made next year in February, okay, which is beyond the control of the company. The contingent asset is not recognized in the financial statement because existence of the compensation is confirmed only when a court decision is reached in the following year. However, in this period, it will be disclosed in the disclosure notes to the financial statement as contingent asset. So contingent asset also no journal entries required. Okay, so disclosed in the disclosure notes to the financial statement because of favorable verdicts or judgment. Right? Okay, disclosure requirement, the last part here. Okay, normally provision, the company need to disclose the provision in the notes to the financial statement, the meaning of the provision, all right. Okay, contingent, then contingent liabilities and contingent assets. Okay, now let's go through this illustration. Okay, Tulip Berhad was incorporated in 2001 and has grown to become one of the largest plastic manufacturers in Malaysia. Tulip Berhad buried a large quantity of chemical waste it was producing in a landfill. As a result, the land has been contaminated. So, describe when provision should be recognized in accordance to Mfrs 137. When? When? When it has a present obligation, right? Present obligation, then number 2. Probable outflow of resources. And number 3.
Reliable estimate can be made.
Reliable estimate of the amount. Thank you. Estimate of the amount. Okay. When? These 3 criteria must meet the 3 criteria, recognition criteria, reliable estimate of the amount. Okay. In each of the following scenarios, briefly explain whether or not Tulip Berhad would be required to recognize a provision. Any provision recognized for situation number 1, number 2, number 3. Number 1. Okay, number 1. Okay, number 1. Can I ask Adeline to answer for number 1?
Yes.
Right? Read the statement and state your answer.
There is no
I think your internet connection not so good because I can't hear you.
Hello?
Hello. Testing. Louder, louder, please.
There is no legal requirement
Better.
to clean up the land, and Tulip Berhad has no record of cleaning up land that it has been contaminated.
Any present obligation?
No,
No present obligation. No present obligation meaning next?
no provision.
Yeah, no provision. No present obligation, no provision. If there is a present obligation, check for criteria 2. If criteria 2 pass, check for criteria 3. If the event met all the criteria, then recognize it as a provision. Okay, thank you, Adli. Next, number 2. Ehsan.
Yes, madam.
Try number 2.
There is a legal requirement to clean up the land.
Any present obligation?
There is present obligation.
Present obligation. So legal or constructive here? Legal or constructive obligation, Ehsan?
Legal.
A legal obligation clearly stated in the statement there, right?
Yes.
If your answer is constructive, kena pusing-pusing kau. Alright, so any provision recognized here?
Yes.
Yes, alright. Yes, there is a provision recognized for this statement number 2. Alright, thank you. Number 3, Nur Farhana Azra.
There is no legal requirement to clean up the land, but Tulip Berhad has a long record of cleaning up the land that it has contaminated.
Any present obligation?
No,
No. Are you sure? No legal obligation, but the company has a record, a statement, a published, a practice, a long record, okay, a long record practice of cleaning up the land that it has been contaminated. So what is that? That one. Okay. Policy. Entity practice. It has a long record of cleaning up the land. Entity's action. Fall under which category? Legal or constructive? Constructive obligation. So, is there any present obligation?
yes.
Yes, definitely. Although no legal requirement, but the company has a long record of cleaning up the land. So it has the constructive obligation. Do we recognize a provision for this number 3 here? Recognize provision or not? Number 3.
Yes.
Yes. A provision is recognized because of the company has constructive obligation. Let's check for the answer here. Where is it? Here is the suggested answer for number 1. Here. A, a provision should be recognized. Okay, there are 3 recognition criteria here. Okay, B, no present obligation, no provision. There is present obligation. Present obligation, legal requirement. There is constructive obligation, present obligation, constructive obligation because of the past event. Okay, so provision should be recognized. Okay, then situation number B here. We discuss the illustration. Okay, then I will brief on the kita ambil you all nak solat dulu ke nak sambung terus? Briefing on the group project.
Sambung terus.
Sambung. Okay, sekejap dia briefing on group project around 10 minutes. Alright. Okay, let me continue with second part here. Okay, this is the application. Okay, in June 2014, 100 residents living near the landfill became seriously ill, possibly as a result of exposure to the leaking toxic waste. Legal proceedings were commenced seeking damages from Tulip Berhad, which disputed liability by claiming that the waste buried by Tulip Berhad was responsible for the health problems of local residents. At the end of the reporting period, 2014, Tulip Berhad lawyers advised that it was probable that Tulip Berhad would not be found liable, would not be found responsible for that health problem of local residents. Okay, so we need to check any probable outflow of resources. If no probable outflow of resources, no provision is recognized. Okay, question number 1. Assess whether the legal case above is regarded as provision or contingent liability for Tulip Berhad. What do you think of the above case? Nur Akilah, number 1.
Contingent liability.
Why? Why do you think it is a contingent liability?
Because the company will not be found liable, like what you said there, and it has present obligation.
Okay, it has present obligation. Why present obligation? Because of the legal
Past
proceeding, right?
event. Yeah.
Yes. Of the legal proceeding. Present obligation, you need to check for the 2 criteria. Legal obligation or constructive obligation. Not because of the past event. Past event, the local resident having a health problem, right? They claim for damages from Tulip Berhad, right? That the past event. So the question is there any present obligation? Yes, right? Because of the legal proceeding made by the resident, right? Local resident, right?
Yes.
So legal obligation, not a constructive obligation. Constructive obligation is from the company's action. Now, legal proceeding from the local resident, from the customers, right? Okay, so it has present obligation. Okay, check for criteria number 2. Any probable outflow of resources? No, right? Stated in the second paragraph here, the lawyer advised that it was probable that Tulip Berhad would not be found liable. If would not be found liable, no responsibility, no probable outflow of resources to settle for the damages, right? So if not meet the criteria number 2, of course no provision to recognize, right? So recognize what? Contingent liability. Alright. Let me share with you the screen here. Okay, can you see this? This one. Sorry. Here. Situation 1. Present obligation? Yes. Legal obligation. Legal proceeding. Probable outflow of resources? Of course, less than 50% chance. Okay. Reliable estimate amount? Nil. So, what is the accounting treatment? Recognize the event as a contingent liabilities in the notes to the financial statement. Alright. Okay. Now, situation number 2. Assuming that in 2015, the lawyers are of the opinion that owing to the recent development in the case, I like this. It is probable that, okay, here. It is probable that the company will be found liable in their disposal of waste. Tulip's lawyers estimated the damages for the lawsuit amounting to RM 2 million. Reliable estimate can be made. So explain the accounting treatment of this situation. Okay. So number 2, can we recognize the provision or not for situation 2?
Yes.
Yes, right. Okay, look at the situation 2 slide screen here. Okay, obligating past event. Okay, claim for damages, present obligation, legal obligation, probable outflow of resources, more than 50% chance because Tulip Berhad, the company will found liable, reliable estimated amount 2 million, recognized as provision in the statement of financial position, debit, SOPL, operating expenses, credit, provision for damages, 2 million. Okay, now, situation number 3. Okay, show the journal entry to record the transaction for situation 2 above, an extract of statement of financial position of Tulip Berhad at the end of the year. This one. Okay, journal entries. This is solution for number 1. There is present obligation, no provision is recognized, the matter is disclosed as contingent liability in the notes to the financial statement. Situation number 2, probable that the company will be found liable, provision recognized, because of present obligation. Alright, there is a reliable estimate can be made, there is a probable outflow of resources, recognized provision. Situation number 3, show journal entries. Okay, debit SOPL, lawsuit expenses, credit provision for damages. You can use damages. Okay, 2 million. So, how do we disclose in the non-current asset? Or not non-current asset, non-current liability, statement of financial position, provision for lawsuit if settlement take more than 1 year period. So, classify it as non-current liability. Okay, this is just the review question for the past year question. Alright, you can have a look for the sample of the December 2019. Okay, with the suggested answer here, right? Okay, will help you to answer the tutorial question. Okay. Let me recap the session here. Okay, stop presenting here. Okay, state the name of the standard for Mfrs 137. Shukri.
137. Standard provision, contingent liabilities and contingent assets.
Yeah, okay. Standard 137 is for provision, contingent liabilities and contingent asset. Thank you. Okay. Define provisions. Nur Aina Syafiqah. Tinggal 40 dah daripada 45 ni. Aina?
Provision which are recognized as liability because they are present obligation and it is probable that an outflow of resources embodying economic benefits will be required to settle the obligation.
No, that one definition of liabilities. Check back, provision. And someone have Aina? Only 3 words. Definition of the provision. Anyone?
The liability of uncertain timing or amount.
Ya, Wafa. Very good. Okay, Aina check back ya. Definition of provision, not liabilities. Okay?
Okay, madam.
Alright. State the 3 recognition criteria of provision. Amri. Tasnim.
Ya, madam.
Yeah. 3 recognition criteria of provision.
Three recognition of provision, madam. Yeah, an entity has a present obligation.
Yeah.
An entity has a present obligation, legal or constructive, as a result of past event. If it is probable that an outflow of resources below 50% chances embodying economic benefit will be required to settle the obligation. A reliable estimate can be made of the amount of the obligation.
Yeah, right? Okay. So, thank you. When we recognize the amount as a provision, okay, so what is the journal entry to record the provision? Valentina.
Yes, madam. Madam, can you repeat the question?
What is the journal entry when we recognize the event as provision in the books? Journal entries. State the general journal entries for provisions.
Kejap ah.
Debit entry?
Debit operating journal entry for provision.
Yeah.
Debit SOPL. Credit provision.
Credit provision. Okay.
Yes.
So, okay. Very good. Thank you. Okay. So that's journal entry when we recognize the event as a provision. Okay. So settle for provision. Okay. Next, contingent liability. Okay. Contingent liability because of the probable outflow of resources is less than 50% chance, right? So what is the accounting treatment to record for the contingent liabilities, to recognize the contingent liabilities in the financial statement? Anis.
Yes, madam.
What is the accounting treatment for contingent liabilities? No journal entries for contingent liabilities. So what is the disclosure that we should make? Refer, slide. We have 37 members only here. Okay, faster. Amira Alia, please help Anis.
Yes, madam.
Okay, can you help Anis?
Yang jenis entries tadi
Oh, contingent liability. That one provision. Oh, tengah jam raya lah tu.
Madam ulang balik boleh tak?
What is the accounting treatment to record for contingent liabilities?
No journal entries required.
No journal entry, so where we should record it?
We should disclose contingent liability in disclosure notes to financial statement.
Alright, no journal entries, but the disclosure is required in the notes to the financial statement. Why? Because contingent liability is not present obligation, do not satisfy the criteria for liabilities, no probable outflow of resources, no reliable estimate of the amount. Alright? Okay, how about contingent asset? What is the accounting treatment for contingent asset? Izwan.
Madam, internet Izan dia lembab sikit.
Okay, saya tengok lain. Mirza? Last question, faster.
Hello.
Fast respond. What is the accounting treatment for contingent asset?
Disclosure requirements.
Disclosure requirement in? Disclose kat mana ni? Where? Is it in the profit or loss? Is it in the financial statement? Masuk tak sesi dengan apa? Misi Madam Lina tadi. Tak.
Disclosure note to financial statement.
Disclosure in the notes to the financial statement. Why? Kenapa? Why we cannot recognize it as asset?
Because favorable verdict.
Okay? Kenapa?
Favorable verdict.
Favorable verdict, that one example.
Okay.
In the example, right? Favorable verdict, judgment or court decided that it is on the it will be the company will win the case, right? Favorable verdict, so it will be in an inflow to the company, so it is contingent asset. But why it is recognized in the disclosure notes, not as a asset or current asset in the financial statement? Because of the uncertainty of the amount, right, to the amount. Okay, because the hearing will be will be held in the next accounting period, not in the current reporting period. Okay, so also another criteria for the disclosure of contingent asset, there will be probable inflow of the resources. Okay, probable inflow of resources if the judgment make a decision on the payment received by the company, then you can record it as the receivable. Okay, receivable as a current asset. If it is only probable inflow, alright, then record it as a contingent asset. Okay, done. Okay, I'll pass you the tutorial question, then we will discuss in week 9. Okay, week 9. I owe you the suggested answer for the events. For the tutorial event after reporting period, okay, that one I'm not share with you in the Google Classroom yet. And I would like you to try a sample, there are three past semester question, okay, exam question. You can try on your own. I will provide the answer in the Google Classroom, okay. So for this week, week 8, I will provide the tutorial answer. I will release it as soon as on Monday, all right. You can do at any time, complete it and upload the answer, please, okay. We will discuss the answer in week 9. Okay, in week 9. Okay, dah 5:04 dah ni. Okay. So let me share the group project. Okay, group project. Project ni sebab dah masuk. Kalau tak bagi dekat you nanti lambat. Okay, group project now. Okay, question. Let's start with the question first, right? Question. Let me share with you also the appendix given here. There are two appendix, Appendix A and Appendix B. Okay, let me open all the files first. Okay. Because this group project, the weightage mark is 15%. 15. Okay, we only have one group project. So you need to score the 15 marks. Right? Let's check. Can you see my screen here? This is the question. Boleh nampak tak?
Boleh.
Jelas tak? Boleh Okay. This is the group project. Okay, the name of the group project is Preparation of Published Financial Statement. Okay, please read the definition of this group project is to comply with the PLO number 9 on personal skills. Okay, personal skills. So description here, this project requires students to self-created accounting transaction based on the minimum requirements and prepare the financial statement. The objective are to test on independent learning and understand the ability of students in creating the adjustment for each of the MFRSs that they have learned. The adjustment may also include any MFRSs that students have learned in previous semester. So you may include in your adjustment, okay, including the MFRS inventory 102. Okay, take note, MFRS 102, MFRS 4 to 10. What else? What MFRS 116 in FAR 270, right? MFRS 102. What else? What other MFRS that you learn in FAR 210? Besides MFRS 102. The adjustment will cover for 1 year accounting period. Okay, 1 year accounting period. Okay, so accounting period you can have from January 1 to 31st December 2021, for example. Don't prepare the statement for January 1, 2022 to 31st December, no. Because we prepare for the past record, right? Financial statement for previous year, not the current, because this year only 5 months, if May we not completed the December yet, right? So use 2021 if you want to 2021 as your accounting period from January 2021 until 31st December 2021. Okay, the submission is using in a form of a report, type written, Arial 11, showing a brief introduction of types of the business. Okay, this including the business background. Okay, business background including name of business, business address. Okay, then this one you can create business address or location, type of goods sold. Okay, what are the types of goods that you are plan to include in your business, business activities, as well as the financial year end. I prefer you to use from January to December. Don't use at June as accounting period. Okay, name of business. You can choose the company's name of business, types of the business. You can choose the companies with the word Berhad, Senia Berhad, enterprise. Okay, trading, partnership. Okay, so peer evaluation form will be used to ensure the assignment is a group work that demonstrate confidence, self-control, social skill, and proper ethics, and commitment to professionalism in the workplace. Okay, instruction here. Each group should consist of 4 to a maximum of 5 members. You can choose your own members. Okay, complete the form that I will provide to you later, okay, in the classroom. I will share the Google Sheet with you. All right, please complete that Google Sheet. All right, online drive here. Student will be given a trial balance, see Appendix A, which consists of related account balances. Let me share with you this Appendix A here. Can you see my Appendix A here? Okay, this will be the trial balance. All right, trial balance. So every group need to use this trial balance. Don't create your own trial balance. No. Okay. So what you need to do? A, create transaction for 1 full year of accounting period based on below minimum requirement. 5 adjustment for MFRS 116. Okay. 2 adjustment for MFRS 140. This is IP. 2 adjustment for MFRS 108. 2 adjustment 108 on accounting policies, estimate and errors. 2 adjustment for MFRS 110 events after reporting period. 2 adjustment for MFRS 137 provisions, and 2 adjustment for MFRS 15. MFRS 15 later, right? During the, we will cover it after the provision topic. Okay. Any 3 adjustment from any previous semester topics. These 3 adjustment is for MFRS 102. Okay. Adjustment here, okay, for example, if you state that one of the example of the transaction, okay, the company purchased motor vehicle for RM 100,000. Okay, so the adjustment, debit motor vehicle, credit cash, for example. One journal entry, 1 adjustment. And then at the end of the year, the company need to charge for depreciation, 2nd adjustment. Okay, debit depreciation, credit accumulated depreciation. If the company sell the motor vehicle, the old motor vehicle during that period, provide the transaction, okay, then you record in the journal entry, 3rd adjustment. Ada 3 dah. And then revaluation of asset, for example. Okay, revaluation of land, 4 adjustment. Adjustment number 4. Revaluation of building, adjustment number 5. Okay, boleh?
Boleh.
Okay. You can consult me if you need to consult with me for the transaction because I need to see your progress report, right? Okay. B, prepare the journal entry for each of the adjustment. C, prepare the statement of profit or loss. D, prepare the statement of changes in equity. Prepare the statement of financial position. F, prepare notes to the financial statement, including property, plant and equipment, and provide the adjustment for contingent liability or contingent asset. This normally bonus. Okay, bonus. Okay, if any. Okay, students are allowed to refer any lecture or tutorial that have learned in class and required to make their own adjustment. You cannot copy directly from the example, just change a little bit in terms of figures and the name. Alright? Don't take it directly from the example or the tutorial question. Each group must consult with their lecturer the progressive report or draft every week in the last 4 weeks during the semester. Late submission may be penalized. The cover page shall consist the title and the name of each group member. Students should also submit their peer evaluation. See Appendix B together with the final report. Okay. This is Appendix A for trial balance, Appendix B for peer evaluation report. Okay. 20 marks here. Okay, here is the peer evaluation report. Peer's name 1, 2, 3, 4, 5. If you have 5 members, 4 members here. Okay. What else? Okay, this is the rubric for the group project. Here is the introduction. Okay, personal skills, content of the report and student's name. Total marks for the group project is 80 marks. Total average mark for peer evaluation 20 marks. Okay, and then total up marks obtained, then multiply with the 15%. Okay. Okay, let me share with you the Excel Google Sheet here. I provide this. You see my Google Sheet weekly progress report here. Nampak tak? Boleh? See this? Okay. Weekly progress report for group project FAR 270 June 2022. Okay. I put the due date here. The week 9, week 10, week 11, week 12. Alright, so week 9, okay. Week 9, the due date is on 10 June 2022. So you need to decide on the group members. So here is the for group D. Group D. Okay, look at the sheet tab here. Group D, group E. Jangan salah masuk group lah. Group E and group F. Okay, group F. Okay. So for group D, for example here, okay, decide on the group member's name. I complete this form. You need to type the name of the group member here. Okay, for example, Adeline, 1, 2, 3, 4. Already calculate here. For group D, 4 group. Okay, there are 2 group with 5 members. Betul tak? 18, 4 kali 4, 16. So ada 2 orang akan masuk, akan 2 groups will be 5 members. Right? Okay, and decide on the name of business. Okay, write the name of business here, complete this form. Business address and location. Okay. Business activities. Okay. And then state the types of goods sold. Alright. And 6, accounting period of financial year end. Okay. 7, accounting transaction. Okay, accounting transaction as follows. Right. 5, adjustment for MFRS 116. 2, adjustment for MFRS 140. Alright. The due date is 10 June 2022. If possible, for the number 7 here, okay, the screenshot the answer, your adjustment, right? and provide the link for the, or just provide the link for the answer, right? I kindly screenshot the answer or provide the link to the respective column, like journal entries, alright, all the adjustment. Not necessarily to write the adjustment here, alright? Just provide link to the respective adjustment because I need to check your adjustment whether correct or not, alright? If you have any problem, then you need to follow this schedule, alright? Week 9 complete. If you fail to update this item, that's mean it affect your marks on the report, okay, on the time management this, because I need to check your progress report, okay? Week 10, week 11, you have completed until statement of changes in equity. Don't do the last minute job, preparing all the requirement, okay, within 1 week, no. Because your marks depends on the progressive report or the progress report, weekly progress report. All right, okay. Group 1, Group 2, Group 3, Group 4. This is column for Group E and column for Group F. Okay, any question?
Madam, untuk any three adjustment from previous tu, maknanya kena, kalau tiga-tiga tu contoh daripada MFRS yang sama boleh?
Okay, adjustment. Okay, MFRS 10102. Apa yang you belajar lagi? 4 to 10?
107.
107 tu apa?
Preparation of statement of cash flow.
Cash flow nak masuk macam mana?
Maknanya MFRS 9.
MFRS 9. No. Okay, I give you sample I put it here. It's easy to help you in preparing the one. Okay. MFRS 102 inventories. You can have inventories. You can have receivables. You can have adjustment for receivable, for example, allowance for impairment of trade receivable, bad debts write-off. 2 adjustment already. 1 is for inventory, enough. Okay. Off and allowance for impairment of trade receivable. Okay, done. Okay, adjustment. 1 is for inventory, 1 for the bad debt written off, and third will be allowance for impairment. Okay, settle. Anything else? Ada lagi nak tanya? Boleh buat, insyaAllah, right? Because this is first time the faculty implement this new group project, this new format, the new group project format to assess on the personal skills of students, right? Yes. Okay. Okay. Okay, stop sharing. Okay, I try to upload. So bagi extra time, right? I give you extra time for the first week. First week, you can start. I will try to upload by tomorrow. Alright, you can start once I upload all the question as well as the rubrics. Boleh buat terus. You can decide the group members by now. Okay, Pilih dah ni, tanya kawan-kawan. Alright? Kalau saya pilihkan, tak kena pula kan? Betul tak?
Betul.
Okay. Alright. We'll have quiz week 10. Nanti kita akan ada quiz week 10. Quiz on 3 MFRS. Okay. Then rasanya quiz and group project je untuk file. Habis. Final exam online, still online. Part 5, final exam face to face. Be prepared from this semester. Okay?
Okay.
Alright. Okay, thank you. Okay.